Today's Iraqi Dinar update centers on a real and confirmed banking development involving 7 Iraqi banks. But before anyone jumps to conclusions about what that means for the currency, there is important context viewers need to understand. This is not a revaluation announcement. It is a correspondent banking story, and the distinction matters a great deal. Let's start with what actually happened. In July 2026, during a visit to Washington led by Iraqi Prime Minister Ali al-Zadi, the Central Bank of Iraq and the United States Treasury Department reached an understanding to rehabilitate 7 previously restricted Iraqi banks. This agreement clears those banks to begin re-entering international correspondent banking channels, starting with other currencies as a step toward eventually restoring their ability to handle US dollar transactions. Iraqi officials have described this as part of a broader effort to reform the banking sector and bring it further into compliance with international financial standards. This is a confirmed development, reported by multiple Iraq-focused outlets covering the Washington visit. What it represents is a compliance and correspondent banking milestone, not a change to the exchange rate, and not an official revaluation. Correspondent banking access determines which Iraqi banks are allowed to move money through the international financial system, particularly in dollars. Banks that were previously restricted, often due to anti-money laundering or compliance concerns, have had a harder time processing international transfers. Bringing more banks back into these networks is a meaningful step for Iraq's financial integration. But it does not by itself change how many dinars a dollar is worth. That distinction is exactly where a lot of online commentary goes wrong. Headlines describing this as a sign that the RV is here are not supported by anything the Central Bank of Iraq or the US Treasury has actually said. Neither institution has announced a new exchange rate, a timetable for one, or any secret rate available to banks or account holders. There is currently no verified official timetable for a revaluation of the Iraqi Dinar. Now let's look at where the exchange rate actually stands. As of Wednesday, August 19, 2026, the Central Bank of Iraq's official rate remained fixed at approximately 1,300 to 1,310 dinars per US dollar. The same general range it has held since the CBI's last rate adjustment, back in February 2023. The International Monetary Fund continues to describe Iraq's currency system as a conventional peg, referencing an official rate near 1,320 dinars per dollar. This is the rate used for government accounting, the federal budget, and documented transactions processed through the CBI's electronic currency sale platform. The parallel market tells a different story. On that same day, cash exchange rates in Baghdad, Erbil, and Basra were trading dollars at roughly 1,547 to 1,548 dinars per $100 basis, in other words, a premium of somewhere around 18% above the official rate. This gap between the official rate and the street rate is not new. It reflects ongoing demand for physical dollars in cash transactions and informal trade that don't move through the documented banking channels where the official rate applies. When the CBI tightens compliance requirements on currency exchange, something it has done repeatedly over the past 2 years to meet anti-money laundering and counter-terror financing standards, that can temporarily widen the parallel market gap, because fewer transactions clear through official channels at the pegged rate. So to be clear, the official rate has not moved. The parallel market rate has fluctuated, as it does regularly, but nothing here indicates an imminent, sudden jump in the dinar's official value. There is a second major storyline running in parallel to the banking news, and it's one that often gets confused with revaluation: the removal of zeros from the Iraqi dinar, known as redenomination. In early August 2026, Iraq's federal cabinet formally placed a 3-0 redenomination on its policy agenda. Reporting from Iraq Business News tied this move to fiscal pressure following the closure of the Strait of Hormuz amid regional conflict, which sharply reduced Iraq's oil export revenue, a critical issue given that oil accounts for more than 90% of federal income. With a 4 million-strong public sector payroll to fund, the government has reportedly leaned on printing additional dinars to bridge shortfalls, which carries longer-term inflation risk if left unaddressed. In response, the cabinet has been evaluating options that include both borrowing and currency redenomination. and reportedly sought a constitutional opinion from Iraq's Federal Supreme Court on the scope of cabinet authority over currency reform. Separately, on August 18th, Iraq's communications minister was quoted saying that a decision had been made to remove zeros from the currency and that new notes would eventually be printed. This is a reported statement from a government official, not yet a formal central bank announcement with a published implementation date. So it should be treated as a reported development, rather than a fully finalized policy. Here's where the terminology really matters, because this is the single most misunderstood concept in Iraqi dinar coverage. Redenomination is not the same thing as revaluation. Removing zeros from a currency, for example, converting 25,000 dinars into 25 new dinars, is a technical, cosmetic change to how the currency is denominated. Under the structure being discussed, existing holders would retain the exact same real value. A bank account or cash holding worth a certain amount before the redenomination would be worth the same amount after it, just expressed in smaller numbers. It does not automatically mean the currency has gained purchasing power on international markets. A revaluation, by contrast, is an official increase in a currency's real exchange rate value, something the central bank has not announced and has repeatedly said is not part of its current policy stance. Conflating the two is one of the most common sources of confusion, and often of misleading promotional content around the Iraqi dinar. There's a related but distinct development worth mentioning: the digital dinar. The Prime Minister's economic advisor, Mazar Mohammed Salih, confirmed this week that a central bank-issued digital dinar remains under study as a strategic project, tied to Iraq's broader push toward digital financial infrastructure and faster government salary payments. He was careful to frame it as a complement to structural reforms, not a standalone fix for Iraq's liquidity pressures, and noted its success depends on expanding banking services and technical infrastructure first. This is a banking modernization story, not a currency value story, and shouldn't be read as a signal about the exchange rate either. Stepping back to the bigger economic picture, Iraq's foreign currency reserves stood at more than $100 billion as of mid-2026, according to central bank data. A historically strong reserve position that gives the government meaningful room to manage a redenomination transition or other structural changes without destabilizing the currency peg. At the same time, currency in circulation outside the banking system has continued climbing through 2026, a trend the central bank has flagged as it works to draw more cash back into formal banking channels. These are the kinds of structural, slow-moving indicators that matter far more to the dinar's long-term treasury than any single headline dot. So what does all of this actually change? And what doesn't it change? What changes? 7 more Iraqi banks are on a clearer path back into international correspondent banking networks, which is a genuine step forward for the banking sector's global integration. What doesn't change? The official exchange rate, which remains where it has been since 2023, and the absence of any confirmed revaluation plan or date. The zero removal conversation is advancing at the policy level, but it remains a redenomination discussion, not a currency appreciation announcement. And no implementation date has been formally confirmed by the central bank itself. Now, addressing the claim directly, the idea that these 7 banks rejoining correspondent networks means the revaluation has secretly begun is not supported by any statement from the CBI, the U.S. Treasury, or the Iraqi government. The verified information is limited to what both institutions have actually said: a compliance and correspondent banking rehabilitation agreement. What remains unknown is any specific timeline for further banking reintegration, any change to the official exchange rate, or a confirmed date for the zero removal process. This distinction matters because promotional content that blurs banking compliance news with revaluation speculation has misled dinar holders for years, and it's worth staying skeptical of any claim promising a specific new rate or guaranteed profit. Looking ahead, there are a handful of developments worth watching closely. First, any further statements from the Central Bank of Iraq specifically addressing the exchange rate, since that is the only body with authority to change it. Second, formal action from Parliament or the Federal Supreme Court on the constitutional questions around redenomination authority, which would signal how quickly that process might move. Third, additional correspondent banking announcements involving Iraqi banks, which would show whether the momentum from this 7-bank agreement continues. Fourth, updates on Iraq's oil revenue recovery following the Strait of Hormuz disruption, since fiscal pressure is a major driver behind the current reform push. And fifth, any official CBI communication specifically about the digital dinar's development timeline, separate from the redenomination conversation. To summarize where things stand, confirmed is the agreement to rehabilitate 7 Iraqi banks for correspondent banking access. Reached during the Washington visit in July 2026, confirmed is that Iraq's official exchange rate remains unchanged, in the 1,300 to 1,320 dinar per dollar range. Advancing, but not yet formally finalized by the central bank, is the cabinet-level push toward removing 3 zeros from the currency. Unconfirmed is any revaluation, any secret rate, and any specific timetable connecting these banking developments to a change in the dinar's international value. What hasn't changed is the fundamental gap between Iraq's official and parallel exchange rates, and the absence of any CBI statement suggesting that gap is about to close through. Revaluation. This video is for informational and educational purposes only. It is not financial advice. Currency markets can change, and viewers should verify important financial information through official and reputable sources before making financial decisions.